Laxmi Machine Works came out with their second quarter numbers that were in line with what the analysts were estimating. CB Chandrasekar, CFO of the company, and Darshan Mehta is joining us to discuss the quarter gone by. Darshan, over to you.
Okay, Laxmi Machine Work came out with numbers after market hours yesterday. The sales were rather flat, but there has been strong growth as far as the EBITDA is concerned. That grew 21% and profit grew 21%. Margins are close to the 11% mark. We're joined by the CFO, Mr. Chandrasekar of the company. Thank you, sir, so much for speaking to us. First of all, sales has been down both on a year-on-year basis as well as a quarter-on-quarter basis. The numbers were fine, but sales seems to be rather muted. Is something that we're seeing. What seems to be causing this weakness, sir?
No. Actually, I think how come you are saying like that? Because basically, because of the India's adjustment, because the first quarter it was with the excise duty, that is a gross sales we have reported, and it is not comparable at all. That's what we have given a statement very clearly. As far as the Q2 is concerned, it is without GST. So there is a lot of confusion is there. In fact, there is a growth of about 17% compared to the previous year.
Okay. So what's the demand situation like? Are we seeing increased demand situation as far as the textile sector is concerned?
As far as the textile is concerned, today the last quarter seems to be a little bit tough and challenging because of the GST registration and things like that. And now that the cotton has arrived, the market seems to be a little bit improving on all front. And also export is also slightly picking up. Maybe from the next quarter onwards, it will show some signs of improvement. And export of yarn to China has come down. That was the main reason for the local suppliers, local manufacturers, especially the textile mills. They had a lot of pressure, and yarn stocks were piling in almost 1 month level. So now that there is a kind of an improvement, which is happening basically because of the arrival of the cotton, and the price is getting stabilized as far as the raw material is concerned.
So what about exports and domestic market? What's the outlook that we can share for both these verticals?
Domestic market seems to be more or less flat. As you rightly pointed out, there may be an organic growth of 3 to 5%. That's what we can expect. Because of the GST implementation, the things were getting slowed down, but hopefully everyone will fall in line with the GST, and the things may get ready from the next quarter, that is Q4. So we can expect some kind of improvement from Q4 as far as the domestic is concerned. Export is concerned, it seems to be a lot of improvement in the Vietnam side. And also from the Turkey has also improved now because the investments have started growing, and also Vietnam is also now picked up basically because China is buying a lot of yarn from Vietnam now, and they have also set up a lot of factories there, and Bangladesh seems to be really growing at a very fast pace, and it is also showing some kind of improvement compared to the previous year. Indonesia, of course, it has some kind of a dullness, but now they say that from the Q4, that is from January, we can expect some kind of a growth.
Okay. You've done consistent EPS of 40 rupees in the first 2 quarters individually per quarter. Will this run rate continue?
Definitely, because we are focusing on the bottom line with a lot of initiatives which we are taking inside the company to optimize the cost. In spite of our selling price, we have not increased for the last 6.5 years. We are able to manage basically because of the initiatives which we have taken to optimize the cost at all levels.
Okay. And my final question, so margins have been constant between the 10 to 12% level for the past few quarters. How do we see margin improvement? What's the strategy that you're looking at?
Margin improvement may slightly improve if exports is going to grow. That is what we are also expecting, because we are focusing, because since the domestic market is going to be more or less flat, we expect exports to grow to some extent. So the exports will definitely give us the value addition, point number one. The second one is we are also introducing a lot of new products, which will definitely give us some kind of value addition. So margin per se, on the whole here end, there may be some kind of more or less on the same levels it will be, but there is a possibility of growth if the exports picks up in January.
Okay. Thank you, sir, so much for speaking to BloombergQuint, and all the best for the quarters going ahead.
Thank you very much.